need to analyze different markets? That's a very good question, right? We need it because we need to understand the correlations between them. We need to understand the negative correlations and the positive correlations. We need to understand how the market moves. As always, I say, whenever we're doing this type of analysis, what we're doing is we connect the dots, right? We connect the dots. And that's how we need to get more information out of the market. That's what we do in different types of market analysis. Okay? So if you're doing like fundamental, technical, sentiment on chain, that's what you want. So you need to understand more what's going on the chart. We need to forecast the market, not to predict the market. There's two different meaning, guys, forecasting and the predicting. What is your forecasting? You dig more information out of the market. You research a lot, you go deep, okay? So you need to understand what's going on. You will find a reference point that you can refer your bias to. So the reason we're doing different market analysis, we need to understand better how the market moves. Fundamental analysis. Fundamental analysis is 80% of the market. Okay, so fundamentally, when you analyze the market, why we do the fundamental analysis? Fundamental will tell you what's good to buy. What's good to buy. And technical will tell you when you buy. This is a difference. Fundamental will give you an information that this asset is a good time to buy. Okay? Then technically, when you do the technical analysis, will definitely tell you when to buy. Because if the market is still downtrending and it's not a good time to buy, the technical will tell you the market is not coming to the support yet. Wait till the market come to the support and buy. So fundamental analysis is the process of assessing intrinsic value of the security, whether it's overvalued or undervalued. As I said earlier, fundamental will tell you when it's good to buy. Okay, so you want to understand whether security or instrument you're buying is undervalued or overvalued. It's overvalued, will I buy? No, I won't buy. So I just leave it there till I will wait the asset become undervalued. Like today in the market. If you look at the stock market, if you look crypto market, all of them undervalued or overvalued? Sorry? Undervalued, absolutely. They're all discount price. They're all cheap today. So maybe in next month or maybe in next year, you will see different prices. That's the time to get in the market. One, I will explain later on about the fear and greed index. Now, the fear and greed index indicating the market is what? Extreme fear, okay? And Warren Buffett said, be greedy when the others are fearful and be fearful when the others are greedy. So now the whole world are fearful, right? So is it a good time to buy? Yes, now is a good time to buy. Okay, that's how we use it. Buy low, sell high. Okay, and that's what we want. So if I'm looking, the instrument that I'm looking at, if it's on high price, like the BTC when it was 109K, I was yelling to everyone, do not get into the market at this level. Okay, because I knew the market will correct from there and will give you a discount price. So you have to understand when to buy and when to sell. As they say, buy low, sell high. Many people get in here. Today they're under the water, right? Yeah, I've seen it in AJ Crypto, in the community. I know the guy who bought Solano 295. Where is Solana today? 105. More than even 50%. Almost, I can say, 70% of his investment is gone. Imagine if he get out from there, that money he will never see it again. But if you hold his horse is tight and wait till the price reverse to the upside, yeah, he might get back his money. But I guarantee you, many people, they become so emotional and they will sell everything and they lose everything. And that's the problem of many people not to get educate themselves in this field. That's why they're not making money. So the whole point we do in technical analysis is to understand whether the asset we're buying is undervalued or overvalued. The reason we study the market, the past market data is to analyze what's coming next. Okay? At the same time, I need to take the informed decision, right? I need to know what's going on. I need to be safe side of the market. That's why we're doing this kind of analysis. We need to do more research. We start monthly time frame, we go down to weekly time frame, we go down daily time frame, then we go down 4 hour, 1 hour, 15 minutes. So to understand what's going on, okay? What is going on. And that's what we're doing when we're doing the past market data. So is that enough only on that time frame? No, I will go back. Last year, what happened? A year before, what happened? Because what they say, all the time, the market repeats itself. Okay, history repeats itself. So if the fractal move that happened 2017 will happen again 2025 or 2026. That's how the market works. So we need to understand how the fractals move and how the market moves in order to predict what's coming next. So when we're doing technical analysis, we based on price action with the chart. Then we take advantage of the moving average and the oscillators as a confirmation. Okay, many people get wrong on these indicators. They will think, oh, indicator will help me to take a better trade and let me decide based on the indicator. Means if the RSI is below 30, let me buy. If the RSI is above 70, let me sell. Does it work that way? No. Indicator just help you, guys. We seek the indicators or help use the indicator to get more help, our confirmation based on the price action. Okay, whenever we take in a trade, we need to take based on what we see on the chart, not the indicator. Indicator will help to confirm more that the confirmation that you get from the chart is confirmed and you can go ahead with it.